Okay, it's great to be back. Had a little bit of time off last week where I was able to go out on a vacation with family, enjoy a little bit of whitewater rafting. Nobody got thrown in. It was a good time, but I was itching the whole time just to get right back into the stock market. I was keeping an eye on it, but I was just really ready to get back, do some videos, some live streams, some podcasts, and really just get back down to the markets. Crazy thing is I didn't really miss out on much. I mean, if you look at the overall market over the last 8 days, it's been anything but impressive. We've just been trading simply sideways for 8 straight days. And that's where a lot of traders can really get themselves into a lot of problems, because there's this inherent urge, no matter what kind of trader you are, there's always this urge to want to buy a stock, short a stock, do something, right? I mean, that's something that we just have this inherent urge. We have to trade. But usually it's the lack of trading and difficult markets which will really help you out a lot, because right now I have yet to actually make a new trade in the month of June. That's very rare. That doesn't happen, but it's actually happened more times than not here in the beginning, or here in the first half of 2022. And I don't like that. I'm like you guys. I like to be trading, but I also know too that patience, I'd rather be patient on a trade than not be patient and lose money unnecessarily. Yes, we're going to all have losing trades, but if you can avoid losing trades and not take them unnecessarily, that's even better, because it puts you in a position to profit when those right trade setups come about. Right now, I only have a third of a position of my original position that I had in SPY. Last week, I closed out QLD, and that turned out to be a really good trade, like 15% on the final third. Really, really good time trading that one. But SPY, I think I'm up like 4% on that trade, and I'm down to like my final third. I would love to be able to get more into the stock market than what I currently have, but the market's not providing me that opportunity. We're just turning sideways the whole time. So we're going to talk about that channel that we're trading in and what I'm waiting for. We're also going to get into the Qs. We're going to get into the Russell. Plus, I'm going to go over all of your charts. I'm going to go over your stocks, your questions, whatever you have. These things usually go for like 45 minutes to an hour. I just go right down the list and check out all your stocks. We already have John in the chat room. We got Lights Edits. Let's see, who else do we have here? Kevin Hawthorne, James Knight, Kevin Angers. Great to have you guys all in here and hanging out with me here for the next hour or so. So S&P 500. One of the big things that we have seen with SPY, whether it's SPY, Qs, or the IWM, is we're getting these big candles, right? And then you get these gap down doji candles the next day. So you have the big gap here, gap down doji, right? So a doji candle, for those who don't know, it's just simply where like you have a decent sized range, the shadows being this little thin red line right here, or on the green chart, it's the little thin green line. And then you have the body of the candle, this box here. That one, that's where the opening and the closing price is very close, if not exactly the same. So you have a very tight opening and closing price, but it happened on a gap down. You had another big candle here. This was on Thursday of last week. And then you have somewhat of a doji gap down candle. I wouldn't quite call that a doji, but it kind of has that same flare. And then today again, let me go ahead and take the post-market action so it's not skewing these things at all. We had a big candle yesterday. It looked like, okay, we're going to maybe break out of this trading range. And then what do? Nope, not so fast. We gapped down. And for the most part of the day, we had a doji candle, and then it sold off there in the afternoon. So it's not been a very good trading action. So let's look at the 5-minute chart here. This is the last 8 days. Guys, this is really, really tough trading. And then you get one of these from like last Thursday to where it says, oh, maybe we're breaking out of this range. And you get like 2 5-minute candles into the close of Thursday that maybe it sucked in a lot of buyers, because usually the final 10, 15 minutes of trading, that's where you're getting the biggest amount of buying. Sucked in a lot of traders to the long side. Okay, we're breaking out of this range. And then what happens? We gap down. So there's a lot of people just getting their capital churned to pieces. So when I say I haven't made a trade this month yet, or a new trade, the reason why is because what is the edge? And that's what we should be asking ourselves on all these trades. What is the edge here? There's no edge on SPY right now. We're just stuck in a sideways pattern. Maybe you go sell at the top end of the range and buy at the bottom of the range, but how long is that going to last for? I don't know. I mean, once once that ends, you get a breakout, you get stopped out right there. Or if it breaks down below, you get stopped out. And the reward, the reward is not that great to say, hey, yeah, this is a range worth playing. So it's a very difficult 8-day range. Now, where I made the money with like QLD and on SPY, it was this move right here. This was a nice move, but that's come and gone. And so now we're waiting. Okay, are we going to get the second leg higher on SPY? And we're going to maybe see this push to where we go and test perhaps this 445 level, or is this the lower high? Lower highs meaning where each peak of each market rally is subsequently lower than the previous one. Is this the lower high? And then we're just going to go ahead and make a new lower low. So that's the big question here, and that's what I'm waiting for. So I have a short setup, or not a short setup, it's a long setup on an inverse ETF on QID. If we can break out of this range, I would not mind adding to my SPY position, whether it's like I was interested in not Facebook, but Ford today. I was also looking at Apple and NVIDIA, and there were some others that I was looking at. But guess what? Let's see. The other one's Shake Shack, Microsoft. Yeah. So I was looking at those from a long standpoint, but we never broke out. And it looked like at one point when we got that gap down this morning, we started rallying higher. Okay, that's what we saw yesterday. That's what we saw last Thursday. Okay, this market intends to break out. But if you try to get ahead of that breakout, and so you could get in at a lower price, guess what? You lost money. The people who waited to see whether or not it would break out didn't lose anything at all. So that's basically it right now. I'm waiting to see, are we going to break out of this price range here? And if we do, then that's going to guide my trading decisions going forward. And it's not just SPY that's in. It's also on the Qs. I mean, this is a nasty trading range. And you can see it just as much on the 5-minute chart. I mean, it's just bouncing all over the place here. And it's not making it easy for people trying to get into some new long positions. And also yesterday, so I have a 30-minute waiting rule, right? I won't get into a new trade if my ideal trigger price is triggered in the first 30 minutes. Like I won't get into that trade. I'll wait for the first 30 minutes to pass, and then I'll play a break on the highs of the day. So if you were trying to short QQQ at the opening and it looked like it was going to break down out of this range, you were just getting squeezed all afternoon, all morning and all afternoon long. I mean, it was just a brutal rally yesterday for shorts. So that's another thing to keep in mind. All right, I'm seeing a lot of questions coming in from Ryan Gerke and James Knight and EOG. Yes, we're going to get to all those questions here, and we'll knock them all out. Okay, so IWM. Here you have the declining trend line still in place. This has actually done a lot better. So we haven't talked much about the Fibonacci's yet today. Actually, none at all. But this retracement here has had the best retracement of all the indices. We've actually hit the 50% retracement on IWM. So from here to here, we're looking at what percentage of this sell-off will it retrace. 38.2% is the one of the more traditional retracement levels. 50% is the other one, and then 61.8% is the other retracement level. And it goes both ways. It can go to the upside where you have a retracement or a pullback, and it goes to the downside where you can have a dead cat bounce. Right now, I'm still in the mode of this is a dead cat bounce, and you don't see the same consolidation on IWM either, but it did get just above the 50% retracement level and start to pull back. So it's reached that 50%. That's what I've been aiming for all along. I just don't know if we're going to see it now on SPY or the Qs. The Qs, by far the weakest right now in terms of a market bounce or in terms of the retracement amount. It's only gone 38.2%. This is your 38.2% level right here at the top of this trading band. It barely touched it, and then it has just traded sideways ever since. Same thing on SPY. It actually got a little bit above the 38.2%, but could not make it to the 50. It got close. It was like 43, 44% retracement. But again, I was looking for that 421 move. Has yet to do it. Could still get there. If it breaks out of the range, that's in play. But the other thing to keep in mind too with SPY is you have a declining trend line in place. Let me see if I can draw that a little bit more accurate. So yeah, so like 420, it's at 419. So there's about 2% of upside before it runs into another layer of resistance. If it can break through that, that would be right at the 50% level. Then you have the big test here at 445. One of the things that I was talking about in my previous video is that I think there's a good chance that we could see some consolidation here. And I still think this is in play. We break down, but we don't actually make a new low. We double bottom it, and then we rally back up and probably test this much bigger declining trend line here in the month of June, or maybe even into early July. We saw a similar double bottom play out on the Qs right here, where we rallied and then we pulled back. Actually, it was kind of more like a triple bottom per se, but we rallied and we came back down, and then we made a much bigger rally than what we saw. So in the Qs, if that was to play out again, go back down, test the lows that were established in May, and then go on just a jailbreak kind of rally back up to this declining trend line right here. So that's what I'm looking for. Hopefully I didn't throw too much at you there, but that's the stuff that I'm looking at on all these indices here. On the VIX, again, this little white line here that goes all the way across, going all the way back to September, September of 2020. This continues to reject price, put in the bottoms. So this is yet to break. I think at some point during this market rally or this market sell-off, we will break and create that panic moment. But right now, is every time we get to this like 33, 34 level, people start buying. It doesn't happen. When that fails, that's where I think you start seeing the capitulation in this market decline. We're back down to 23.4. Even today, it's still traded lower despite the S&P being down 1%. The NASDAQ being down like 0.7, and then the Russell being down 1.5%. VIX still declined. Very, very low volume today. And usually you don't see like on a 1% decline in the markets, you see such low volume, but summer's starting to kick in. Just like I was saying, I was on vacation last week. I wasn't trading. There's millions of people that are active in the market that aren't trading this week either, just probably like last week. And that's what's creating a lot of your low volume levels right now. And so that tends to persist throughout the summer. And then it starts picking up once kids go back to school and after Labor Day holiday. Okay. You guys ready to get to some of your charts here? I am. I'm ready, man. So first up, MEO from Light Edits. Cool looking avatar there too. I'm going to push my mug just above the question there. Can you look at, or maybe try this. Can I go like this? Let's do this. Maybe this would be a little easier. I'm going to do that. Look at that, man. Problem solver. MEOH and SLB. So here we have a pretty nice trend line in place. But do you really want to be buying the stock when it's disattached from its long-term trend line? Because right now you have to kind of default to the fact that if the sell-off continues, we're going to retest it. You also have a shorter-term trend line right here as well on MEOH. It broke below it back in May, but it quickly recovered. So that's a good sign there. And then you have, let's see, some resistance overhead here that it seems like it's struggling with. Tried to break out of it today. Tried to break out of it back on May or April 18th. Couldn't do that either. So you have two right here. One and then two. Couldn't break out of either one. So I'm looking for maybe like a retest and a bounce, or if you want to be a lot more careful, you'd probably play off of this massive rising trend line that goes all the way back to the March 2020 lows. So those are the two factors there that I'm looking at. You also have some support at the 200-day moving average to be aware of. If you're long on it and it's pulling back, you want to see how it reacts on a break of that. The breakout, and breakouts are kind of difficult in this market, because if it does break out, then it's also subjected to a lot of difficult market conditions. A lot of breakouts aren't happening there, and that's why you're probably seeing a couple of head fakes right here along the way. So keep that in mind if you're wanting to play this breakout. If you were to play the breakout, I'm probably looking at it more from like a 53.70 would probably be the trigger price for it, and then you're looking at a stop loss of probably below yesterday's lows. That's probably as far as I'd let it go. So let's look at SLB, and this one's been running pretty well. This is one I was highlighting in the trading block today. Let me go just give you a fresh scratch here of fresh, clean chart. So you had this pullback to a significant support level. This goes back to what, June of last year. And so it held on major bounces there. And looking back, it would have probably been an ideal trade setup for me to take. So I didn't get into it simply because I was looking to play QLD, and that turned out to be a fine trade too. So not as good as SLB. If I had to do it over again, I would have done SLB, but I was looking more for that market bounce. I felt like that was a more obvious play. And if the market rallied, I wasn't sure how energy would react to a market rally, if it would maybe see some profit taking and people jump into tech instead. So I held off on that. But the lows, right here, you could have put a stop loss at like 39.98 and then played this breakout, and it was just off to the races. This could have shaken me out a little bit, just that massive bearish engulfing candle pattern, or at least taking a little bit of profit off the table. But man, beautiful chart. So right now, I mean, watch how it performs with like the 10-day moving average. It doesn't look like it's closed at all below the 10-day moving average along this nice solid run from 42 to 49.57. You also could say this would be a good line in the sand right here if it breaks below like 45.20, 45.35. That would be a good reason to get out too, because then it's a little bit more than just the average pullback. Okay. John, I had a fantastic holiday, so thank you for asking about that. It was a good time with family. Can I chart LLY? Eli Lilly. Trying to find the support level there. That looks like a pretty decent support area right there. You also have what looks like a decent rising trend line as well in the short term. That one's held up pretty well. Long term, let's see this sucker. I mean, you could say there's a rising trend line there that you could play a bounce off of. So if it pulls back, we get a big pullback. This would be about, doing simple math in my head, a little less than a 20% pullback from current pricing. Then maybe that 263, 264 level would come in play. That's not in the here now. So if a person's long on it right now, they should be really watching this short-term rising trend line. If they don't want to play it that tight, then really it would be this huge support level. If it pulls back, that could also provide a decent place to get long on. So this support level here, can it bounce off of the support level on a market pull or on a pullback in LLY? If it can touch that 285 and hold, that could be a good place to play the bounce. But right now, yeah, I mean, it's pretty nice. Almost like a little bull flag there. I wouldn't quite call that a bull flag, so we'll delete that. But nonetheless, nice bounce off of that rising trend line yesterday and a little bit of follow through today despite a very difficult market. Right back at you, Kevin. You're not too far away from me there in Lakeland, Florida. We got John in Delvin, Colorado. Let's see. James Knight. SIGA. Oh, I looked at this earlier today. So this is the stuff here this is where the bag holders get created right here. And no offense if you're a bag holder, okay? I'm not trying to target anybody, but this is the kind of market action that creates a lot of bag holders, because you might get shaken out of this position or something like that, and it goes down, and then you start seeing it rally like this. Like, oh, this is it. This is the reason why I got in, back at 1387 or whatever. And then you get back into it, and then you get subjected to another sell-off. It's like, I'm not selling this time. It's going to come right back up like last time. And then all of a sudden you just find yourself like stuck in this chart, and it's just endless whipsaw. I mean, considering recent market action, it's only down 8.2%. And I say only because, I mean, some of these runs are crazy. Now, this is based off of the whole monkeypox thing that's going on right now. And a lot of people are taking it serious. A lot of people are nervous about it, I guess. I don't know. I don't know anybody that's ever had monkeypox before, but the market's showing some concern about it. And you got a lot of Wall Street bets folks, they're jumping into it because they're thinking, okay, maybe this is the next wave of COVID stocks that are going to go through the moon. But I mean, there's a lot of science already out there that says this isn't the most contagious, I don't want to get into the medical side of it because I don't want to scratch all that. I'm not going to say anything about it. I don't think it's going to be a major play for the stock market, right? SIGA. SIGA, I mean, you got a little bit of consolidation there. You got a little bit of maybe a little bit of a trend line that's trying to work there. That's holding so far, but very volatile, very difficult to contain the risk. I mean, look at some of the gap downs you're seeing in the stock. I mean, going from 1370 at a close one day down to 1176. You can't manage that kind of risk. So it doesn't, it's not worth it for us to try to play it. So, I mean, ultimately, I wouldn't be surprised to see this thing come down to $8. That wouldn't surprise me at all, especially if this is just a short-term blip on the radar. But really, our focus shouldn't be on these stocks. It's not that I can't do them on these live streams. I love looking at pretty much any chart. But as traders, if we want to be successful long term, it should be about making consistent gains over many trades over many years. And that's not the most exciting proposition to put forward. A lot of people want to say, hey, buy these stocks and you're going to get, freaking wealthy or whatever. And it sells. That message sells. I'm not going to sell that message because it's not true. And trying to hit the home run with one or two stocks and thinking that that's going to be all you need in life, it's just a fantasy. It means it doesn't happen. Like, I'm sure there was somebody that, there was people along the way that bought options. I mean, that Roaring Kitty or whoever that dude was, it sounded like he made a killing off of GameStop. I mean, yes, there are case studies like that. But if the whole world's trying to do it, like what we saw in GameStop back in the day and what we're still seeing with people trying to trade GameStop right now, if just legions of people are doing that, no one's going to get rich. It's just how it works. You take a look at to go back to the guy with like the Roaring Kitty guy, right? I mean, he was in before anybody else. He was buying when everybody was just trashing the stock, when nobody thought that it ever had a chance of ever going back up again. He was buying the options and he was going super leveraged, and it paid for him, right? But we can't. But when everybody's trying to do that, it's not going to work. So some people say, well, we're going to stick it to Wall Street. This is the turning moment. But that's the same thing as saying it's different this time. And every time you say it's different this time, like the market can't go down this time, the market's going to go down. I see that a lot right now with real estate. Everybody's like, oh, like where I live, right? It's a very heavy defense contractor area. Everybody's like, oh, there's no way that the real estate bubble can burst here in on the East Coast, the Space Coast of Florida. Yeah, it can bust. It can, and I've seen it before. I lived through it. So anyways, I don't know how I got onto all of that with SIGA, but I did. Good question, James. All right, Kevin asking about the put call ratio. You asked about it in the chat room today. We talked a little bit about there. He says, I see anything over 0.7 is bearish sentiment. Would you agree? I look more usually for like over 1 is usually much more of a bearish sentiment in the market. But oftentimes too, you get the put call ratio where the puts are at extremes. Then oftentimes that can also be a signal that too many people are short on the market, and you're going to see a lot of people get squeezed. So Ben WV. Hey, Ryan. Hey, Ben. Same to you, Ryan. Let's see here. Also, thoughts on the FOMC meeting next week. Dump coming after trading sideways recently. So, FOMC statement. What is my take on that? So, they're expecting a 0.5% rate hike, right? And that's fine. I don't think anybody's going to be shocked by that. I don't think anybody will be shocked by it at the next meeting when they raise it another 0.5%, unless they change their mind in between then. Oh, by the way, what am I drinking? I'm not trying to be like a cat chasing a laser pointer here by switching subjects so quickly. But Calumet 8 year. So the quick thing about this, I always drink like some bourbon on the live stream. I just like it. That's kind of what I like to do. Not while I'm trading though. This is after hours, so I can do that. But this Calumet 8 year, I had the 14 stocked in the bar as well, but this 8 year bought it for like $39 at Costco yesterday. So that's a really good deal. And I rated it on the podcast that guys might have heard yesterday as well. Gave it a 6.4. Since then, it's really grown on me. I'm kind of regretting that I did it at 6.4. I think it's definitely a 7.1 if I had to re-rate it. It's nice and airy. I don't know if I've ever given that term to a bourbon before, but it's light and airy, and it's a great weekday sipper. I mean, you can sip it throughout the week. It's really nice. No, I'm plugging their bourbon for free, but I mean, I've done a lot of them, some not so good bourbons and some bad, some really good bourbons, but that's what I'm having for this live stream. So talk about SIGA, so that makes me want to drink. All right. So about the FOMC meeting, if they, if they don't cut rates as much, I mean, that's going to create a much bigger, or if they don't raise rates as much, that's going to create a much bigger market reaction. If they raise rates even more than expected, that would also create a big market reaction. What direction? I would probably say if they, I don't know. I would probably say for sure if they aggressively increase rates, let's say they do like a 0.75 or a 1% increase, which they're not going to, or at least I don't think they're going to. If they were to do that, that would probably create a much bigger market downturn swing. So everybody's going into it with the expectation of a 0.5% rate hike next week. What you got to remember with that is, even though we know what they're going to do, they're probably going to, it's probably going to be nothing new in there may be some language changes and stuff, like they're trying to, offload their balance sheet. There's like $9 trillion on it. I think eventually they're going to ramp up to something like 95 billion or 97 billion a month. And I think they're starting off around 45 billion starting on June, this past month, or beginning of this month here, June 1st. So if I don't know if they're going to change that at all. That's possible that they could, but I don't expect it to. I think they're going to want to ramp it all the way up to like the almost 100 billion before they start, making any decisions there. But what's the kicker is, even though we know what the market, or what we already know what the FOMC is going to do, we don't know how the market's going to respond. So that's what's always the interesting thing. The presser can turn into an absolute clown show. We've seen it take some big dives. We've seen it take some big rallies, but don't get sucked into the initial reaction that the market has. That initial reaction sucks in a lot of traders, and it causes them to make a lot of bad decisions. I usually wait like 15 to 30 minutes, and oftentimes I don't even trade that day at all, because I don't want to get in beforehand. Sometimes I will if the FOMC isn't really considered a big issue for the markets. We're in a sustained bull market, and they're not really playing a heavy hand on the market. I won't care then. But when it's right now, where all eyes are tuned to the Fed and everything that they're saying, and we're reacting like crazy to things like even the minutes now, yeah, I'm going to probably hold off trading the day of, and then wait for the FOMC statement to come out, and then probably not even trade that day, just because you can't predict exactly how the market's going to respond. Usually you get a couple of head fakes, and then you get the ultimate direction. So let's see. EOG, I am taking requests, man. Let's look at SOFI. SOFI people on StockTwits hate me, man. I don't. If you post a chart with some lines on it, people freak out. They really do. And I'm not sure where all the hatred comes from, but if you're getting mad at people because they're trying to post an honest opinion on Twitter or StockTwits, there's a problem with your trading. You shouldn't be getting into like this. Oh, you're a moron. You don't know what you're doing. All that stuff. If you're getting to that point, you're way too emotional on your trades. And that's what you see a lot of people on these stocks like SOFI. I'm not saying EOG's this way. EOG's been on this channel for a long time. I've never got a hint of emotion out of him in that regard. So he won't mind me being honest with him on this stock. I actually, the last time I posted a chart on SOFI, I said, maybe it's trying to turn the corner here. I mean, it's testing it. It's consolidating nicely below it. That still may be the case, but it's got to get away from this declining trend line that keeps hammering price lower. And so far, it's just riding the underside of it. If you can get a good breakout, and we've seen that in some stocks of late, like I was just pointing out Ford, right? Say Ford had this downtrend. Or actually, that's not the right one. What was it? Can't think of it. But there was Ford's still actually below its declining trend line too. But if it can break out above it, there may be a trade there, because it doesn't look bad here going back to April. I mean, it hasn't declined. I mean, it declined in mid-March, but it's pretty much at the same place that it was at back in mid-April. So there's a potential there, if it can break back above it, for it to make a decent run. Maybe it can get back to like $9 or something. It's trading at 666 right now. Interesting closing price, right? LEU. What do we got here? So you got a little bit of a breakout. Now, I don't know if this is necessarily a significant trend line, just because it's only been tested once along the way, but it did break above it. I mean, that's better than not breaking above it and creating a more more determined or a stronger trend line to the downside. So that was pretty good there. This one, yeah, this maybe even a little bearish. I don't think it's narrowing quite enough, but you definitely have a support level underneath it as well. So trying to see where the short-term support level. That's really all I've got to work with there. I mean, you'd think there'd be more, but maybe that is more of like a bearish wedge or a bullish wedge. I'm sorry, bullish wedge. Strong volume on the breakout. Looks pretty good. I mean, it's 14% up today and a ton yesterday. Not something I want to go chasing here just because I can't manage the risk at this point. If it could pull back to this declining trend line that it broke out of around maybe like 30.89, then that might provide you with an opportunity to get long on it if it can hold that level. And then Unity Software. Eesh, this one's not been too good. Kind of like a bear flag a little bit here. I've been watching. Not a perfect bear flag, but definitely looks like one to me nonetheless. You also have, let's see. So you got a little support right there, or not support, resistance. So we go from 45. I mean, this is big moves that we're talking about here, but trading at 45 goes up to 72. That would probably create a little bit of a rejection in price there, or at least I would expect it to. You got a declining trend line right here that it's probably much more near term and more likely that it'll test it. It's only been tested one time in the past. I don't know if you can hear that. There's a lot of thunder outside, and hopefully I don't lose my live stream. If it does, you'll know why there's a thunderstorm outside. So maybe 58 would be the resistance I would watch for it here. If it can break out of this sideways channel that's creating a somewhat of a bearish flag, then like around 49 tomorrow, then there's a move or opportunity for it to get up to 61. Very volatile stock. The market breaks down. This one's going to likely have some significant selling associated with it. So be mindful of that. And here's why you use stop losses. And I may have highlighted this in a previous live stream, but it's worth repeating again. I got into this back in October. I don't remember where it was. It was probably like 130, 140 or so. Rode this sucker all the way up. I think I might have gone out like at 180, and then it went up a little bit higher, all the way up to 207. Imagine if I didn't use stop losses. I think I'd be down like 75% on this trade. Instead, I got out for like a 20 or a 30% profit on it. That's just shows you how essential managing risk is, because if you get married to a stock, I go from being 20, 30% up on a stock, and then all of a sudden I'm looking at 75% loss or so. Where is the best place to learn about Fibonacci? You mentioned the reason why I mentioned, and you know what? I'm not even showing you guys my chart. Shoot, I bet you guys are screaming about that down below. I've had stuff that happens on these live streams, right? All right, I'm going to go backwards here. This is what I had on Unity Software. My gosh. Okay, my apologies, guys. Declining trend line right here is what I was talking about, resistance here. So I'm just going to take a sneak peek at the comments. Not showing the chart. My bad, guys. I was only looking at the chart. My bad. I swear some of you guys are probably about to lose it with me here. Maybe I shouldn't be drinking and doing this at the same time. But again, I'm only on my first glass, so you only see me take one sip. Resistance here, declining trend line there. This is the bear flag that I'm speaking of. And you got some resistance at 57.58. Then let's see, LEU. This was the bearish wedge I was talking about. We broke out above it, but it just doesn't look all that promising right there in terms of being able to manage the risk. I think I would avoid this one. If it can pull back to the declining trend line here around 38.75, 30.80, then maybe, and it can hold, then that could be an opportunity to get long. SOFI. This is what I was talking about. SOFI is declining trend line. Just a brutal trend line that continues to reject price. Unless it can get above that, there's really no trade there. But there is a potential if it can get above that, the 50-day moving average, which seems to have a little rejection there as well. That's the red line on this chart. If it can get above that and get back, it has a potential to maybe run to $9, even like $8. That would be an amazing trade. Let's see. What else did I miss here for you guys? Okay, that was it. My bad. Let's see. Meet you at the Bing. Yen is crashing. Will lead to a crash in finance. Possible. Very possible. But I don't get into currencies too much. But I mean, I'm not saying it can't happen. Amazon. So they had the 20-to-1 split this week. I forgot all about that. Not that it actually even really matters, but a little bit of consolidation there. Now that we got the charts back up, you guys can see what I'm talking about. See what happened here, though? Yeah, it's trend line here, and it almost looks like it rejected price right at it here. Let me see. Pretty close, yeah. I would say that's a good solid price rejection there. And so now it's being weighed down by this declining trend line that it tested. Really nice run, probably one of the best runs out of the FANG stocks this past couple of weeks. But now, okay, it needs to hold this level here, the recent lows, consolidate, and then break right through it. If it can break through that level, 126.55, sure is nicer to talk about, you know, something trading in the 100s and the 2000s. Again, doesn't make a difference, but talking about in the thousands is always much more of a mouthful. There is a opportunity from 126 to 134 before I would say, okay, significant amount of resistance that could kick in, you know, around this one. Yeah, I'd say about 135, 136. Good stuff there. X. See, just looking out for any insight on that one. Yeah, I mean, since we last talked about it, we were looking at maybe this like cup and handle pattern trying to form there. Since then, though, it definitely doesn't look as good as it once was. So you got some support here along the way. But this almost like looks like a bear flag that has developed, and it's not what I would call a textbook, but that consolidation makes me a little bit leery. And now you're getting that break lower. I'd be very careful if it breaks below like this. I'm going to say like 2360 level. That's where I think it could get kind of ugly on the chart. Like anything, you want to manage the risk. No matter how in love you are with the chart, managing the risk is critical. JNK, is it breaking up? And I'm not seeing anything. I mean, that was a nice run, you know, of late, but these high yield junk bonds, until it can break above, I would say 98.56. And I'm not a bond trader by any means. Rarely do I ever trade them. I'm looking at maybe, yeah, I'd say like 90. I'm going to change it a little bit. 98.62, 63 would be where maybe the tide starts to turn on it, and it gets out of this downtrend that's been pretty heavy on it since January. And thank you, Victor, for always watching, man. I appreciate that. I'm glad that you can find time over in Europe to watch me. It's crazy to think that. I've never even been on the other side of the pond, so I don't even know what it's like in Europe or anywhere else besides North and South America, which is the only places I've been to. Oh, we got this guy always showing up, man. This guy, he's a clown. I'm probably like encouraging him to continue to be a clown, but dude's a clown. So for those of you who don't know, I did a video on GME. I swear, the video almost top ticked the chart, and I didn't have any like interest in it or anything. I was like, guys, they're announcing a whatever stock split. I was like, guys, don't fall for the stock split thing here. And they're like, oh, but it's a dividend. It's like, that doesn't change anything. It's still whatever. I'm not even going to get into what a dividend is, because clearly a lot of these GME people don't know what a dividend is. But anyways, it does all this stuff. And then now that you've got like what 30 or 40% rally, everybody's like wanting to spike the football. See, I told you were wrong. I'm like, no, I told you I have to buy it at 199. I still wouldn't buy it here either, but I'm just saying it was clown town to go buying it here. And so you get these goofballs that talk about massive gains, DRS, your whatever that means. I don't even know what this guy is doing. I mean, clearly he's on crack. MU. This is one of Alex's charts, I believe. I think he's the one that likes talking about MU, getting the chart action out of it. So we have this double top pattern here, and it won't confirm it. I mean, it's like been working this thing for ages. It seems like this double top pattern started in December of 2020 and is yet to confirm it. And so here we are, you know, a year and a half later, and is that a year and a half? Yeah, it's about a year and a half. You had a declining trend line. It seemed to break out of that one, but then it pulled back, subsequently pulled back, but it hasn't broken below that declining trend line. At this point, with the support being so nearby, I don't think it really matters anymore. But 66 is going to be the major support level to keep watching on this. It did get us a nice little bounce back up to what, 75. So I mean, that's more than a 10% profit on that trade. But now it's really, you know, if you're looking at it from like the past couple months, it's sideways, man. It just doesn't do anything. Very similar to what we're seeing over the last 8 days with SPY. Man, you guys are lighting me up in the comments there. All right. And then we'll close it out with NIO here. Double bottom on NIO, right? Major declining trend line right there in place. Just looking at some of my other charts that I've marked up, this ain't. No, that could still be valid there. That's resistance right there at 2430. Trend line there, that's the one I just marked up. I think that one doesn't matter much. Double bottom. Broke out of the double bottom. So the next level really becomes, all right, what does it do with like this 24 level there? That seems to be a pretty significant level. That would give you like a 20% profit if it can hold that. The question is going to be is how easy is it to manage risk? If I'm trading this one, nearest stop would probably be below 17. That's a hard place to put a stop loss considering it's trading at 20. That's like a 15% stop loss. So if you're trading with a 15% stop loss, then you need like a 30%. So you really need it to go back and test this long-term trend line in order to justify the trade. That would just give you 2-to-1, and that's in a very high-risk trade. LCID, though, is not bad, if I remember correctly. This one, yeah, this is much tighter consolidation. Not saying it'll give you as big of a profit, but the risk looks like it can be managed a little bit easier on the trade. So LCID, if you can read through all, you got major support here. I mean, you got a little bit of resistance here. I shouldn't say a little bit. That's a little bit of significant resistance at 21-ish. But if you can break above that 2053, get through some of that resistance there, there may be an opportunity for it to run to, you know, like $24 or so. But I think that from a reward to risk ratio standpoint, it's a little bit better than what you're seeing with NIO. I do like the double bottom on it. I think that looks pretty good. I just, at this point in time, if you're getting long on it, that's going to be difficult to justify the reward to risk ratio. But if you got in initially on that breakout, then you did have a good reward to risk ratio, maybe like 1675 is your stop loss. And then you can just ride this. So this is where I would have put it. So I would have gotten in like right around here or right here. Put the stop loss probably around the lows of the May 31st lows. And then you just try to ride it higher. Now, you see in here this little yellow line, this little squiggly line here that's going upward. That hasn't been broken yet on a closing basis. It's gone below it on an intraday basis, but it hasn't closed below it. So for me, that would be my guide. I'd probably take some profits a little bit along the way and then try to get to that like final third or a quarter of a position and see how high that wants to go without breaking below the 5-day. So, guys, gals, lots going on in this market, and sometimes it feels like there's nothing going on in this market because when you take the last 8 days, yes, you have some pretty big price swings, so it feels like there's a lot going on, but we're not breaking out of a price range, and that can be really frustrating as traders when we're dealing with like a price action that's not helping us with our current positions or getting us into new ones. But patience is going to pay, and you're going to keep hearing me say this throughout the year. Patience pays, and as much as I want to be into more trades right now, I'm not going to be because I'm going to let the market dictate when do I get into new trades. And right now, when you're trading in a sideways pattern, market's telling me, hey, Ryan, why would you get in at this point? I'm not giving you any edge to work from. Just wait until, you know, the market breaks higher, the market breaks lower. So make sure you guys like and subscribe to this channel. That really does help me out a lot. Helps me with the algorithm.